Many organizations feel overwhelmed when they get requests for information, data from Central Bank of UAE or any other regulatory bodies. Those who have submitted RFI to Central Bank of UAE or any other regulatory bodies know that how much hard work they need to put into this. And in order to provide that RFI information, many organizations have to work hard, coordinate with other departments to collect this data. It is the time when compliance department burn midnight oil, meaning they have to work late for many days to meet the deadline set by CBUAE to submit RFI. But you need to understand this. RFI is actually a gold mine for AML safety and compliance professional. So after you have gathered that data from various sources and summarize that data into the given format, it will become a risk information. And you can use that information to analyze various aspects of your AML safety program to make a effective decision. In this short educational demo, I will show you how simple visuals can help you quickly spot where controls may not align with risk, where model validation or transaction monitoring tuning should be prioritized. Everything you see here is purely hypothetical and for learning purpose only. Now let's start with customer risk. This is what a typical distribution looks like in many financial institutions, where many customers are low risk customers, fewer are medium risk customers, and there is a small portion of high risk customers. This pattern is common and generally found in many financial institutions. In the right hand side, if you look at the normal distribution curve, so it will follow this trend. For this example sake, let's say in various financial institutions, we have this kind of distribution. Now, in your organization, for example, you found out that after analyzing that RFI information, the high risk customer make up the largest part of portfolio. Now, this doesn't automatically mean something is wrong. It could reflect a genuine high risk business model, meaning that organization is a risk taker and they are onboarding high risk customer to increase their profit margin. Now, to understand this better, I'll zoom into only the high risk customer, break them down by the customer type. That's where the things gets interesting. In this example, salaried employees make up the most of high risk population. However, according to the general practice, salaried employees are considered low risk customer. Why? Because their source of income is understandable and traceable. So this might suggest that for this organization, customer risk grading model may have certain issues. Okay, or there might be certain other data quality issues, or there might be issue with data mapping. So anyway, this case should be investigated to determine why salaried employees are coming in high risk customer segment. Here, our objective is not to blame, it is to identify what needs to be reviewed and validated. Now, let's look at second scenario, transaction monitoring misalignment. So here we look at the transaction volume by the channel. Okay, so these are the different types of transaction that are done by the customer in that organization. So in this hypothetical data set, we can clearly see the remittance dominate business, meaning the business is maximizing its revenue through remittance. And we all know that transaction like remittance and cash result into high risk exposure. High risk exposure meaning that more money laundering and terrorism financing transaction happen through this type of transaction. Okay, it is also mentioned in FATF typology reports. Now, let's come to the another figure. Here I need to explain you something. Okay, so this graph represents the transaction volume for each channel, right? And this line chart, it shows the number of alerts generated by various scenario monitoring this transaction. Okay, this type of transaction. Now you can see, although there is a high volume of remittance transaction, the number of transaction monitoring alerts is less for this transaction in comparison to other transaction channel, right? Now, this is a red flag that there might be something wrong with transaction monitoring system. Okay, so there might be various issues. One may be there might be gap in scenario coverage, meaning the organization have not created enough scenarios to monitor remittance transaction. Or it might be that thresholds are set too high, so alerts are not being generated. Another reason might be the money laundering or terrorism financing typologies that this organization have assumed does not match with the customer remittance behavior. And from the technical side, okay, it might also suggest that there is some kind of a data mapping issues between the organization core banking system and AML system. Again, all these findings are not a conclusion, okay? These are just our assumption. But anyway, this figure gives us prioritization signal, telling us where tuning, testing, or validation is required to deliver most value. From all this analysis, we need to understand that CBUAE RFI don't just test compliance. They reveal status of AML safety risk and controls of any organization. So with this kind of right visuals, the same RFI data can help AML teams to focus on the right problems, use their resources more effectively, and strengthen controls where it truly matters. In this way, we can turn RFI into a powerful risk intelligence tool. So, if you have found this post useful and believe it may benefit others, I would sincerely appreciate if you could repost it. I also welcome your views and suggestions. Please feel free to share your thoughts in the section below. I look forward to exchanging ideas, gaining new perspective, and learning together as a community.